In today's video, we're going to revisit the squeeze setup inside of United Healthcare. We last talked about this setup 12 days ago, and 12 days ago, what we notated were three things in particular. First off was the slingshot squeeze setup with the max available data loaded on, which was 30 years. This signal had a 72% win rate, and we had that signal that same day, 12 days ago. Now, the thing that gave us pause was the fact that the average winner was just 4% compared to the average loser, which was negative 7.32%. So the average loser was much greater. The second thing that stood out was the weekly squeeze, which felt like we were hitting a place where we might exhaust here somewhat soon. And then finally, what we notated was the seasonal analysis, where both November and December were strong months inside of United Healthcare. Now, since the time that we talked about this setup, that's this yellow arrow, price action has done a whole lot of nothing. We've had one additional squeeze signal arrow, and if we take a look at those stats in today's video, we'll have a complete picture of what do we expect to happen here with the squeeze. Now, let me load in that backtester first. So I'll load in our squeeze signals backtester. And for all Volatility Box members, you can download that for free on our website. That's tosindicators.com/squeeze-course. Scroll down and there you'll find the squeeze signals backtester. All of these tools are included for free with your membership. Now, coming back in with the squeeze signals backtester loaded on, I'm going to go to the max available data, which is 30 years in the case of United Healthcare. And once these labels populate, we can now see that we have a grand total of 29 winners, 13 losers, so a win to loss rate of right around 69%. The average winner here is still less than the average loser, and the average trade duration is right around 10 trading days, and then the slingshot squeeze was 9 trading days. Now, if we revisit the actual setup, in both cases, we've well exceeded the average duration of the trade. So that's one reason why I have a little bit of pause here. We've broken that profile in terms of, well, how long are we typically in this trade? This particular one is greater than the average number. The second reason I have a little bit of pause is since the last time where we were really hoping for buyers to kick in here, it feels like the sellers have been able to win. Sure, we did get a pullback to the market pulse on Friday's activity where immediately you did bounce up, and we'll take a look at that. But really, I was hoping that the buyers would have proven their strength by now. So the fact that if we take a look at 1, 2, 3, and 4 of these red candles, and price ever since then has just been chopping inside of that zone for nearly 20 trading days, that to me is a sign that, hey, where are the buyers? I'm waiting for them to kick into full gear here. Take us to at least that 550 mark. Now, in terms of actually playing this overall setup and idea, we still very clearly have our bullish bias based off of the data here. However, we're starting to become a little bit more open towards also the idea of some strong sellers lying around. So really, I'm ready to capitalize on both the bullish and bearish trade scenarios on a day trading basis. I don't mind the bearish setups right now. The way I'm taking advantage of those setups is using our Volatility Box models, and I'll show you some examples of that here. So I have both our hourly stock conservative and our hourly stock aggressive models loaded on. And if I zoom out, I'm on a 5-minute chart, and let's go back 10 days so you can see a few examples here. Now, first off, let's talk about Friday, where we had that crazy wick. This is what we're looking for. Price action to come straight into our Volatility Box zones. This is the aggressive here. This is the conservative. And these are places where we know that we're getting a much better entry price, where we typically see price reverse from. So we already have a bullish bias from the daily time frame. Now we're able to capitalize on that based off of intraday volatility. So this is Friday as an example of price coming into our lower Volatility Box clouds for a long side entry. Now I'll show you both long and short setups here because I think you'll get both in the coming weeks, or rather this week. Now here's Wednesday's activity, another long side setup, which was a little bit more controlled, I think, compared to Friday's. I think much more tradable here on Wednesday. Then here are some short side examples from Tuesday, where you have price in the upper edge of the Volatility Box zones, and you're looking to play the reversal. Same idea to the short side. We know that sellers are still hanging around based off of the daily time frame. Now, even before Tuesday's activity, if we come in, here's Monday. another short side setup, and then from the previous week's Friday's activity, another long side setup here. So you can see both short and long setups. All we know as of right now from the daily time frame is there's a good deal of volatility that's building up, and we're ready to take advantage of that volatility as both the buyers and the sellers fight this out in both directions. We, of course, are still looking for the squeeze to fire long, but if we load it back on our charts here, you can see that the momentum so far is losing a little bit of steam. Doesn't take a whole lot for this to increase, but as of right now, the buyers have yet to prove to us that they're ready to take over control. So one more time, I hope this video was helpful for those of you looking at trading this UNH squeeze, along with for all of our Volatility Box members, giving you one of those symbols that I think you just monitor, and if you do get one of those entries, it's a good ticker that has been very respectful of the volatility models, and also we have very clear bias on one way or the other. Take care, everyone. Good luck trading, and I'll see you in our next update.